Today on Money Matters, shopping malls and markets are filling up again with shoppers with standard operating procedures in place, putting Malaysia on track for a V-shaped recovery by the second half of the year. But how does the country compare globally in its recovery efforts? Are there opportunities to be explored in this COVID-19 pandemic adversity? Join us as we speak to World Bank and Bank Islam Chief Economist in the studio. Hello there, welcome to Money Matters. I'm your host, Azaria Tagaya. In this episode, we're taking a look at Malaysia's road to economic recovery. And with us in the studio to talk about that today is Firas Raad, World Bank's country manager for Malaysia. And sitting next to him is Dr. Muhammad Afzal Nizam Abdul Rashid, which is Bank Islam Malaysia Berhad Chief Economist. Gentlemen, thank you so much for joining us in the studio today. Thank you for making time. So we are talking about Malaysia's progress in recovering the economy. Let's start with the global snapshot first. Now, can you give us a snapshot of how Malaysia is actually faring? What are we doing right currently? We want to know, is Malaysia on track? So can you give us a snapshot of the global scenario as of today?
Okay, well, thanks, Azaria, for having me on Money Matters, and it's great to be in TV3. And let me just say in the beginning, at the outset, that this COVID-19 outbreak, this pandemic, has had an immense impact on global economies around the world. And we predict in the World Bank it's going to affect 90% of the economies around the world. And it is the largest economic slowdown since World War II. So it has really been tremendous. And we see it also in the region. Luckily, in East Asia and the Pacific, the impact won't be as big as we predict in other regions of the world. Probably South America would see a bigger impact. Here it's a little bit less because of China's recovery. I think Malaysia overall is going to get through the storm because it's a small open trading economy. Obviously it is going to be affected, and our forecast is about 3.1%, a negative 3.1% this year. But having said that, we do predict a recovery. You know, all things being equal, if things remain the way they do, and there is a strong public health response that continues, and people do distance socially, that we could see a recovery in 2021. We predict 6.9%, but there's a lot of uncertainty around that figure because of the unpredictability of how this pandemic will play out. But overall, we think that the economy here in Malaysia is resilient for many different reasons. It's diversified in its structure. Its capital markets are quite deep. The financial sector is strong. It has strong macroeconomic management. And these packages have blunted the impact of COVID-19, the Prihatin and now the Penjana.
Yeah, okay. So how would you rank Malaysia in terms of the global scenario? Where are we right now?
I think overall Malaysia is doing quite well, and as I said, I think it's had a very effective public health response. And when you look at the numbers overall, you know, cases, overall deaths, and then over the last week, you know, where the daily count has been in terms of confirmed infections, it's in the single digits. So I think Malaysia can take a lot of pride in its public health response and the macroeconomic response. We think, though, more could be done. We think with Penjana and going forward, maybe some of the households, the bottom 40, can be supported some more. And that would have to involve, I think, more resources and better targeting and better coordination.
I see. Okay, so moving on to Dr. Nizam, what do you think? What do you think Malaysia, where are we right now, and what do you think we are doing right so far? And maybe what other countries can learn from Malaysia, perhaps?
Well, I think, generally speaking, I think Malaysia is on the right track. Initially, the main priorities is to contain the virus, which we did quite well. And as Firat mentioned just now, it's already been single digit in terms of the new infection cases. And then now the focus has shifted towards reopening of the economy. And in that sense, I think the incoming numbers thus far, I think I would say quite decent. Take a very basic examples of economic indicators, car vehicles or vehicle sales. Total industry volume for the month of April, it plunged to 141 units. That's all-time low. But come May, it went up to 22,960 units. So that's quite a V-shape, if you like, you know. So in that sense, I think the numbers has been quite solid in that sense. And then if you look at the business sentiments also has been forthcoming. If you look at the Purchasing Managers Index for Malaysia for the month of June, it has gone up beyond the 50-point demarcation line. So in a way, businesses in Malaysia, they are feeling a bit more upbeat these days. So that should translate into more perhaps rehiring activities along the way. So and then there's also capital markets. You can see how the stock market has been reacting. The FBMKLCI went to its low point of 1,000 and almost 1,220 points in 19th of March, on 19th of March. But now it has been hovering around 1,570 points, thereabouts. So we can see how the equity markets are pricing in terms of how the effectiveness of the policies has been positive. So if these reopening stories, this reopening the reopening of economy narratives continue to take hold, I think we can expect a decent trajectory in the second half of this year. That's my wrap up for the Malaysian economy.
I see. Okay. Now, I want to mention a bit about the US-China trade war. How do you think this will affect Malaysia? And another question I want to ask you is about China is badly affected by the COVID-19 pandemic. So how will this affect Malaysia, and how about our neighbors like Thailand and Singapore, who are also trying to progress and perhaps not as well as we are at the moment?
Yeah, I think when you look back over the last year or so, Malaysia had to navigate multiple shocks at the same time, and we started with the trade war between the US and China, and that slowed down momentum. We saw that in the last quarter of last year and this year. And then on the back of that, then you had this global public health crisis caused by COVID, followed by this global economic crisis. So Malaysia has had to contend with these three crises in a row. And now, I think the big question now, more than the trade tensions between the US and China, is how COVID-19 is going to affect global value chains and global production networks, supply networks, and whether Malaysia then can position itself to maybe take advantage of certain shifts in decision-making by multinational corporations and where they put their production facilities and which suppliers they deal with, because there has been a lot of disruption, but in that, you know, that disruption, there could be opportunities for Malaysia to tap into.
I see. Okay. So World Bank's Malaysia Economic Monitor report has actually said that it's projected that unemployment is expected to rise further. So we will be asking you both about that further after this. Now it's time for a short break. In the meantime, connect with us on Twitter and let us know your thoughts on our discussion today. We'll be back after this. Welcome back to Money Matters. If you've just joined us, we're discussing Malaysia's economic recovery efforts. With our guests in the studio, we have World Bank's Country Manager for Malaysia, Firas Rad, and Bank Islam's Chief Economist, Dr. Muhammad Afzanizam Abdul Rashid. Thank you for staying with us. And now we are moving on to the next sector of progressing in our economic recovery, especially for Malaysia. Now, World Bank's Malaysia Economic Monitor report has actually projected that unemployment is expected to rise further, and the Statistics Department has actually said that unemployment rose to a record high of 5% in April. So what do you think Malaysia can actually do to create more jobs?
So, Azaria, with an economic shock of this magnitude, as we said earlier in the segment, I think joblessness is only to be expected. 5%, as you mentioned recently, which is one of the highest rates that we've seen in many years. But I think going forward, the government can do many things and has been doing things. And one of the things that they can do and have been doing is supporting workers then reconnect with different economic activities. They set up a fund to support the workers skill up and reskill. We think that is a good way to go. Obviously, you need services to match workers with firms, so employment services, and that I think is something the government is well positioned to do, because it has data on where there are jobs and where the demand is coming from. So I think those kinds of services would be very helpful for the Malaysian youth in particular. Other sectors I think are very important, the informal sector, the entrepreneurs, and those involved in SMEs and micro enterprises. They need, I think, the most support at the moment. They're the most vulnerable segment of the labor force.
Okay, in a global snapshot, do you have any examples of other countries and how they've actually managed to create more job opportunities that maybe we can learn from?
Well, in a crisis, Azaria, it's not so much about creating job opportunities, it's about keeping the lights on in businesses and making sure that firms can hibernate, and so they don't lay off employees and they retain them. And so like wage subsidies, something that the Malaysian government has done and other governments have done, are one way to ensure that firms don't shed employees and they keep them. There are other policies that help firms survive this kind of storm, and there are tax exemptions, there are loan moratoria, there are different kinds of policies that governments can take. And when you look at Prihatin and Penjana, there have been elements there that go in this direction. Now, once you survive the storm, and then you start to think about recovery, and the services that I mentioned earlier come into play. Matching workers with jobs, and then thinking about reskilling, upskilling, and so forth.
Indeed. Okay, moving on to you, Dr. Nizam, what do you think about what Firas has said, especially about Penjana and Prihatin in helping the unemployed in Malaysia?
Well, if you look at the numbers, I think the own account workers, those who are, been working in the night markets, farmers markets, catering businesses, that amounted to about 2.59 million as of April. So in that sense, I think the reopening of the economy would actually translate into demand for these services. So naturally, I think these own account workers, these freelancers, would actually find some more jobs along the way. So theoretically, my sense is that the unemployment rate should peak at some point, in the second quarter, and thereafter it should taper down in the second half of 2020. That's on the unemployment rates, which I think it may come down because of the Penjana, because of this monetary stimulus. That's pretty much standard assessment. But beyond that, I think the way I see it, we need to have perhaps a paradigm shift, how we should see how these jobs can be created. If you rely so much on GLCs, for instance, I think GLCs, the way I see it, GLCs are mostly quite mature, and they have this economy of scale, and therefore their requirement for labor has changed. So they would require more skilled workers rather than the unskilled workers. So the shift is ongoing, because I see this in Bank Islam actually. So I think if you continue to think the old-fashioned way when it comes to job creation, I think we're going to see a lot of underemployment. So I think the best thing to do perhaps is to promote more entrepreneurship. So I see there's an empirical study done, the relationship between entrepreneur and the amount of jobs being created in the economy. So I think if you go along that line, that should help us. So perhaps we need to gear ourselves to embrace these so-called new norms now.
Okay, so we have a bit of time before we go for the next break, so we have to ask you this, Firas. The World Bank has actually proposed the withdrawal age to be gradually increased from 55 to 65 for the EPF. Now, this created quite a stir, quite some discussion when it came out in the news last month. So can you explain to us, why do you think this is important?
So, Azaria, you know, in our Malaysia Economic Monitor, there are two segments of it. One is a macroeconomic update, and then typically we select a special topic. And the special topic this time was social protection in Malaysia. And we feel that this pandemic now has exposed and unveiled certain weaknesses and gaps in the social protection system. And it's an opportunity for the country then to put forward a reform agenda, then to try to protect the vulnerable groups in Malaysia. And one of them are pensioners, because we have noticed that the retirement savings as workers near the retirement age are insufficient. And generally we see gaps in the social protection system, which consists of social assistance, and that's cash transfers. So it's like the BSH program. And we see also weaknesses in the social insurance system, which is like EPF, you know, where people contribute to a pension fund. And on the former, regarding social assistance, we feel that the benefits are not sufficient. They don't really make an impact on the bottom 20 and the bottom 40. The program is a little bit uncoordinated, so there could be more efficiency injected into the social assistance part of it. The social insurance, regarding the EPF, we know that there are gaps in coverage, and also there are inadequacy issues, you know, in the benefits, and then how do you ensure over time that people who retire have a sufficient savings? So one of the policy options that were put on the table was then increasing the age, the withdrawal age, over time, over 20 years, just to ensure that when people reach retirement, they have sufficient income. And it's a big question for the country as a whole. How do you encourage people to save, and how do you protect the elderly when they reach you know, retirement age? And it's worth mentioning too that Malaysia has one of the lowest retirement ages around the world. So this has to be taken into account. So what we had put on the table is a gradual approach over 20 years, and that's one option to be considered. There are other things that also can increase coverage and increase the adequacy of social benefits that are provided by the EPF.
Very well. Okay, now before we go for the break, very briefly, Dr. Nizam, what do you think about Firas's comments?
Well, I think it does make sense, but I think perhaps it has to be done, you know, perhaps more studies need to be done to see whether there's a need to restructure the existing system. But the way I see it in a bigger scale, I mean, looking at the symptoms, we can see that people are very, these days, very become financial savvy. I mean, I can see that people are going for courses and training for investments. And this is healthy, the way I see it. So what we need to encourage, to inculcate the society is the financial literacy. So in that sense, I think if we can do that, it could actually complement the policies with regards to retirement age.
I see. Very valid viewpoints from both of our guests today. Something for us to ponder while we go for another short break. In the meantime, if you have any concerns about the economy, or maybe you have something to say about what our guests have said today, go ahead and connect with us on Twitter right now. We'll be back with more after our short breather. We're back on Money Matters. Thanks for staying with us. We are still discussing the economic recovery with our guests in this studio. We have Firas Raad and also Dr. Muhammad Afzal Nizam. Now, gentlemen, moving on to the future, moving forward in our progress to recovering economically, what do you think are some of the other opportunities that Malaysia can actually explore moving forward?
Thanks, Azaria. I would highlight, I think, three issues going forward. I think, first and foremost, the government has to remain vigilant on the public health side and to ensure that going forward under the RMCO, there is no reversal in the public health situation, because any kind of extended, protracted pandemic and its effects would be very detrimental. So I think just keeping the foot on the accelerator, making sure that everybody is distancing enough Secondly, I think, as I mentioned before, on the social protection agenda, this is something that maybe is long overdue and the government can move forward on, both in terms of social assistance and social insurance. So both parts of the social protection system. And then lastly, as we had discussed earlier, now the environment is extremely competitive in terms of attracting FDI.
Yeah.
Multinational companies have been affected so deeply. You know, there are estimates that they have lost 30 to 40% of their earnings. So wherever they put their investments and whatever trading decisions they take, they're going to think twice or three times before they do that. So trying to improve the investment climate in Malaysia to attract investors is going to be an important agenda. And the government is thinking, I think, along these lines, and we would encourage them to do more. And there are thoughts to make the whole system of tax incentives more automated, more transparent, and to streamline FDI promotion amongst the different agencies in the country.
I see. Okay, what about speaking about Malaysia's road to recovery in the local viewpoint? Malaysia actually has 6 phases to the recovery. So now we are in the restart phase. The final phase is the reforms phase. So what do you think are some of the reforms that we can actually look at, especially in terms of policies in Malaysia?
Okay, I must say communication policies will be the number one or key thing areas that the government need to address. Because if you talk about government policy, there's a whole range of policies and some of them may not be popular among the masses. So there could be some confusion along the way, and not to mention the proliferation of the social media can somehow obscure how these good policies, the intention is always good, but when it's being communicated, for some reason there's a breakdown there. So I think that has to be addressed, so that people would have more informed so-called decision to be made when it comes to these policies. So I think the government has to plan carefully their targeted audience, perhaps talking to the say teachers, perhaps, because from teachers it can cascade down to the students and also the parents. So from there you can actually hopefully that whatever policies that they're planning to do and implement, the message is clear, and therefore it can shape the people's expectation and perhaps sentiment, because these will actually have an impact in terms of economic decisions by the consumers, because consumers' private consumption accounts more than half of our economy. Imagine that if you're being misled by social media for some reason, that could have a severe impact on how the economic growth trajectory going forward. So I think I must say is communication policies.
Okay, what do you think about what Dr. Nizam has said, Firas?
I think it's very important. I think communicating strategically for reforms, for promoting economic recovery is very important. And going back to the social protection agenda, I think making sure that there's enough consultation with account holders of the EPF or just generally with segments of society about needed reforms, I think is very important, and it really will make or break certain implementation efforts if they're not carefully thought through.
Okay, so looking forward, we're looking at recovering well, especially now Malaysia is recovering quite well compared to our neighboring countries. But having said that, tourism is one of the sectors that will be affected badly. It's been projected that it might take up to 4 years to actually recover. So we'll ask you first, what do you think about that? What can we expect from our tourism sector?
So as you said, I think the impact is going to be quite sizable and sharp, and countries around the world who rely on tourism are also seeing this because of the travel restrictions. So, and unfortunately, Malaysia's tourism sector depends on people able to travel and able to come here. But having said that, domestic tourism now, the country's opened up for Malaysians to visit, and myself, I've been around the country over the last few weeks, and we've seen a pickup in activity. So hopefully that will help a lot of the establishments survive until the foreign tourists are allowed in.
Very well. Dr. Nizam, your points?
Perhaps for the tourism sectors, the players may need to engage more often with the financiers, perhaps, looking back in terms of their liabilities, or perhaps going for reskilling or retooling, perhaps. So I think those are the areas that this place could actually, try to maneuver. And speaking about domestic tourism, the numbers that I saw for 2019, for instance, the domestic tourism expenditure, about 100 billion, that's quite sizable actually. So I think perhaps it's high time for the existing tourism players to rethink their strategy to focus more on domestic tourism, because as we speak, as we know, the borders are still closed. So like it or not, they have perhaps to really consider domestic tourism industries.
I see. Okay, something for us to think about then. Yeah. Thank you so much, gentlemen, for joining us this week on Money Matters. It's been a pleasure talking to you.
Thank you.
Well, that's all the time we have for this week. Thank you to both our guests for making time today. We really do appreciate all their thoughts, and also thank you, the viewers, for watching. Now, do let us know what you think about the topic that we discussed today, or perhaps you have ideas of who else you'd like to see on the show. Do reach to us on Twitter at Money Matters TV3. Money Matters will be back again same time next week. I'm Azaria Tagaya. Thanks for watching.